following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the dollar index today. We're going to look at this going back quite a few years. This is a chart furnished to us by our good friend Jim Bartolione. And as you can see, we have several ABCD patterns present. We had the really big one that Tom O'Brien spotted many years ago, I think about 5 years ago, when he coined the term King Dollar. And of course, it went from 73 and change up to 105, I believe. And now we're in the midst of our third ABCD correction. I apologize for not being able to add any fundamental stuff to this that we hear in the news and on the CNBC and TFNN and all this. Not TFNN, of course, but CNBC and Bloomberg and some of these other places. But I just don't understand it, folks. And I've got, I'm not, well, I may be stupid, but I'm not ignorant. That means you've been exposed to something anyway. However, even with the education aside, I still don't understand, because you can get three people up there and you get three different answers. And it's hard to understand that. Where if you're looking at a price chart, you're only looking whether the things are going up or down. If they're going up, they're higher. If they're going down, they're lower. Means there are more buyers going up, more sellers going down. That's the bottom line. So watch this dollar index. I know they're calling about the death of it again, but frankly, it looks pretty good to me, and I don't think it looks nearly as bad as people are talking about it. We've had a lot of things happening in the currency markets last night. I wanted to bring up the dollar index and show it to you this morning, because this is the dollar index here on the move here to the downside. You'll see we're right at a 78.6% retracement as we speak this morning. And we did take the lows out of the last 5 days and didn't go down very much from that level. But that's still very, very early in the game. But that's just a completed pattern. It's got the things that are necessary to determine whether you want to be, a buyer or the seller of the dollar index now. And at this time, I would be looking to be a buyer of the seller, i.e., seller. Let's say this again: a buyer of the dollar, i.e., a seller of the euro. So we'll watch those as we go through this today and see how everything unfolds. We've got quite a few things that are happening in the currency markets today. One of the biggest cross rates that people look at are the euro pound. It's not as big as the euro dollar, but it's right up there with the euro yen. So it's probably number 3 in this group of forex cross rates. And if we take a look at this one, you'll notice if we look at the high from back in 2012. This is a long-term weekly chart. This was furnished to us by our good AS from the UK. And as you can see, we went up and we hit the 61% retracement today in the euro pound cross. That's similar to what the euro is doing, making a high. In other words, what this is telling you is you want to reverse this and sell the euro and buy the pound. That's what it looks like from this cross rate, if that's going to work this way. So we'll see. This is one of the major crosses. So keep an eye on that. It's very important. You'll notice that the Gartley came in exactly at 0.618. Your CD leg and your AB leg were also harmonically lined up to that level also. So you want to watch it very, very closely in here. Any move above 115.20 or so in the euro would tell us that this is probably all wrong. We're trading at around 114 roughly right now. We got up to that 113, excuse me, 114.60 last night, but the 786 love retracement was at 114.64. So it missed it by 4 pips, at least so far. we'll see if that's going to be the case. Now, we've had a request to take a look at the one of our favorite morning things is our morning beverage, and that is the coffee market. And one of our listeners here at TFNN forwarded in the coffee chart going back over. It's a daily chart, and as you can see, we've come down and we've touched a 20-minute line right at a 61% retracement. So if you have an interest in buying coffee, which I certainly do not, I don't trade coffee, haven't traded coffee, cocoa, or cotton in well over 40 years, and I have no intention of starting now. But if you'll notice, that 20-minute line lines up really nicely with the 61% retracement. And if you're okay in coffee, as long as it doesn't get below 119 a pound, below 119 a pound, this is all wrong. But that's the advantage of using charts, is that you can say, okay, this is where I want to put my stop. I can't take any more heat at this level, so that's what I would be suggesting here. As long as your coffee doesn't get below 119, you're okay. You might even be safer and wait till it takes out the high of yesterday, which is up at that 123 level. Then you only have to risk 4 cents in the coffee to see if you're right. And this moves around quite a bit because it went from 136 all the way down to 120 in a period of 10 days. We've had one other request to take a look at a commodity that is looking very interesting here from the long side, and that is our high-grade copper. And we will take a look at this. You'll see that we had a nice Gartley form up at the 61% retracement around the 230 per pound level, and now we're coming down to $2, right around 207 a pound sets up the 61% retracement. Now that is not a Gartley, folks, that you're seeing on this chart. This is just a retracement pattern. There is no ABCD structure since we topped on March the 18th. On Friday, March 18th, we topped at 231, and now we're coming down to 210. That's going to be a 61% retracement. That will be a head and shoulders pattern, however, if you go back to November through January and where we're coming in here to April now. But the key is that 207 per pound. And you'll notice that the 786 is 7 cents a pound under that. So it's either got to hold the 207 or it's going to go down to $2. And, if something's really bad, it could make new lows. But I don't think that's going to happen. But we'll have to let the markets tell us what it's going to do. But if you're buying at the 207 level, then you must put your stop somewhere, under that, which I would figure 2 cents a pound, which is $500, would be the maximum. That brings us to another question. One of our listeners emailed me yesterday and had been buying gold on these dips and was thanking me for the gold. And I don't know why he was thanking me, because I still think gold is going to 1190. And I tried to explain that to him, and he was adding to positions as gold was going higher, which have worked out very nicely for him. But I wanted to explain to him that you got to be really careful. I'm going to finish this conversation here on the gold when we get back. 877-927-6648.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were talking about gold and the one of our TFNN listeners that have been buying on these dips that we've had. 212, let me put the chart up here so we can take a look at it and not talk about being blind. This is a 4-hour chart, so each bar is 4 hours, so you get to see, several months, and that's really what we're looking at right here. As you notice here over these past few days, we've had these higher bottoms. After that 212 level was hit, that was the big ABCD pattern. It took 2 weeks for that to complete. And since that time, we've rallied back several times. This sets up a ABCD pattern to come up to the 1256 level. That's still about $14 from where we're trading right now. But even when we get there, we're still going to be looking at a head and shoulders pattern, because that 1256 level was the same level we hit back on February the 11th, and that sets up a perfect head and shoulders pattern. Now, if we go blasting through there, and we get above the 1270 level, then we're off to the races, in my opinion, in the gold. And our thesis that the 1190 was going to be hit is going to be totally wrong. But right now, I just don't see it being wrong until we get above this, I would say 1260. If we clear that, then we'll certainly be able to look at it. And we're watching silver, lagging very, very badly. And as you can see, it's trading a well under $1 an ounce from its old high. So that's actually not a good sign. But let's just watch this unfold. This is actually the first ABCD pattern to the upside, in other words, counter trend. And Gartley said to sell, the first ABCD pattern on the upside as the market makes a correction. That's on page 222. That's why I named it the Gartley 222 in 1975 when I wrote an article for, I think it was either Futures Magazine or Traders World. I might have done different ones for each one, but that's what it was called, a 222. And the reason why I called it that is because nowhere in this book does he take 2 full pages to describe one pattern, and he does that on page 221 and 222. And he shows the little diagrams. One was a Gartley, the other one was just an ABCD pattern, but he was describing the same pattern, which was the Gartley, and that's why I named it appropriately, so who knows. All right, we want to get back here to the euro for just a second because we are at a really critical level. I mentioned it just a little while ago. That was at the 1160 area. That was the exact 786. We missed that today by 4 pips. Our high today was 1156, and it promptly broke about 90 pips in just a matter of an hour or so. Now we're backing and filling to see if this is the case. Now this completes the second of the ABCD patterns in the euro. You'll notice the big one down there in March where we had the 786 and the 61% retracement coming in together. That was a very, very strong support area, and that's how I try to use cycles. Is the price action of the thing will tell me as much as I can get, because the time is so elusive, folks. I believe the time is astrological, and I depend on guys that are really, really smart, like Shane Smolian and Norm Winsky and Bill Meridian and stuff, to help me with the timing and things. But the price patterns are the ones that allow you to enter at a certain price and say, okay, this is either right or wrong, and you're going to be wrong a lot. So what you want to do is to be able to put your stops in and not risk very much. We're looking at several things today in the currency markets. So one is the euro pound. We're looking at the yen dollar, and also the euro versus US dollar. All of those look really, really good. So who knows? We'll see what happens with the how these things run through this, and we'll see what's going on. Okay, going back to our book, The Experts Speak. We have a really interesting one here from Walter Lippmann. He was an American editor and columnist that was around, and he was writing for the Washington Post on October 6, 1968. He said, "Nixon is a very much better man today than he was 10 years ago." Oh, and it is Nixon-Agnew administration will abolish the credibility gap and reestablish the truth and the whole truth in all of its policies. That was Spiro Agnew, Republican candidate for president, who also resigned and went to jail. Oh, he was pardoned for his tax evasion. But anyway, these are opinions of what people have, just like what I'm giving you here. My opinion is based on what I'm looking at on these patterns, nothing more. I'm sure there's millions of pieces of data that you could put in these things, to verify where it's going up, and you could put a million pieces in that could verify why it's going down. So the only thing that really matters is the price action. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's the way it looks from the cheap seats here on 100 South Broad Street in Philadelphia, Pennsylvania, at the offices of Duke & Duke. We'll take a look here at the British pound, because this is another one that looks very, very interesting from a lot of different reasons. I'll switch over here a little bit and do a little forex, and then tomorrow we're going to do some commodity stuff, because we've had some nice action both up and down now in beans, wheat, and corn, and wheat is setting right at this 460 a bushel level that looks very, very interesting. That's a 78% retracement coming off of these last highs that we had, and that looks very interesting. But let's get to the pound. This is a pound on a 60-minute chart going back over the past 5 weeks. As you can see, we had a beautiful ABCD pattern that finished yesterday, and then today what happened is we made a 78% pullback to come down to 140.48, which was the 78% retracement of that whole range yesterday. And then the market bottomed and has had a pretty good rally off of that, but it's telling you that it's trying to reach, this level of support once again. All of these charts are telling me that there's something big getting ready to happen with the US dollar. That's basically the bottom line when you're watching this, these different price patterns unfold on these cross rates. It's a compilation of how these things are reacting, to the U.S. dollar. The U.S. dollar is still king, and it will be unless we go below 90, which is quite a bit away from where we are at the present time. If you'll remember, just a few months ago, it was the dollar yen that was going crazy when we got up to the 136 level, I believe, in the dollar yen, and today we hit it below 108, and that was in the way of see what's going on at the with these markets. Okay, we're going to be looking here at stocks this morning. We'll see what's going to be going on at these levels here, and we'll be looking here in just a second here. Hold on, and we'll be waiting here for 1 second. I have to catch this up to see where we are with the stock market, and we'll cover the S&P just a little bit. 2044 is the S&P number, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to go back to where we were on Monday. Here we are on Wednesday. We're going to be looking here at the Treasury notes because the proverbial moment of truth is coming in Treasury notes. We are very, very close to that 103.05 level. which is a very, very strong 61% retracement that's taken several weeks to complete. You'll notice at the top on the notes when we made the 1.27 and 1.618 butterfly, we also left a shooting star candle. That's highly indicative of a top forming. So we want to be watching the notes here up at this 131.04.05 level this morning. We haven't quite got there yet, but we're very, very close. And bonds are close to taking out yesterday's high, which could take them all the way up to possibly the 167 level, which would be a 78% retracement of this last move down that we had in the bond. So that's another one that we want to be watching. Regarding the S&P, let's just take a look at where we were yesterday. And you'll see here that we had a pretty good move off of the bottom. We talked about that 61% retracement. It came right in at 2034. And then we rallied up last night. We got almost to the 786. We got up to 2061 and change. And now we're backing off. And we're coming to a very interesting pattern that has formed overnight, and I wanted to share it with you. This comes from also one of our good friends at TFNN, and we will put this into the chart package here and let you take a look at it, and we'll see what we're watching right here. You'll notice that we have a head and shoulders pattern last night up there at that 2061 level. And then from that level, you'll notice that the shoulders are just absolutely just spot on. If you'll notice the gold line that's there, that's a 20-minute line coming from the high that we made. And this is only a 15-minute chart, an hourly chart. So you go back to the 2072 level that we made, and that would line up very closely to that. So this is interesting. Now we've come down already. We're almost down to the 2044 level. Now, 2044 will be the 61% retracement of the move to the downside. That'll be very strong support here, folks. I'm always surprised, but it could very easily hit that 2044 level and bounce because it's got such an important spot there, to take a look at it. So watch it very, very close. So 2044, in fact, the low this morning has only been 2045 and a half. I don't know if that's going to be close enough or not, but it's pretty close. So we'll watch to see if that's happening. There's a small butterfly pattern on the half-hour chart at that 2045 area, but 2044 is the 61% retracement of this, and every time we've opened lower in these markets, we've certainly turned the corner and went back the other way. Now, if we look at the gold market now, we're breaking out to the upside again. We're at the 1244 level. The chart that I put into the gold, on the gold, and this is all it is, it's a chart, folks. It's nothing to do with the fundamentals. It's just, what the traders are doing. And I'll put this in here so everybody else can see it again. We'll put it up here. There we go. You'll be able to see the gold that we should measure all the way up to 2056, and the old high that we made just the other day was at that 1246 level. We're certainly going to take that out. That'll be just getting stops. But watch that level of 1256. That's going to be a real interesting one because of the fact that we have this potential head and shoulders pattern forming in that area. But anything above that 64, 65 level tells us that this is all wrong, and I've missed the bottom in the gold. And because I was waiting for, I was really waiting for 1190, and I certainly could be wrong. Silver is still acting a little weaker, but it is playing catch up today. So we'll just see what happens. But don't get too excited. About the gold in here. We'll see what's going to go on with the stuff. But that's my feeling of what we're looking at in some of these markets as we go through these things today. I've had a request to. I wanted to show the gold and silver from where we were. This is behind by a couple of days, but you'll still be able to see that the relationship between gold and silver is totally out of whack. I mean, this is a record, even worse than what it was back in 1980 when we were at $49 a barrel per ounce in the silver market. So we'll watch this, and also we need silver if it's going to be really bull market in gold. Silver will be tagged along. There's no, is still looking at so much stuff. So we'll just see how everything lines up so far this morning. I've had a request to take a look at 1 second here, and I'll bring it right up. I already did the euro pound, and I've already done the copper. I've already done the banking index. Where is the other one I'm looking at here? Oh, here it is. This is the British pound. I just want to see this on a bigger basis. You'll be able to see the British pound here because we've got a real interesting. Hold on 1 second. Whoa, there we go. You'll see this is where we came down the other day to this level. Then we rallied up to the 141.60 level, and then today we backed off to the 78% of that level. So it's trying to hold this level. So we'll keep a very, very close eye on this pound. All of these currencies, every single one that we're looking at, are making what we think are some really big moves here. If we look at this this Swiss franc chart that we looked at the last few days, you'll notice that we've come into an area here where we completed that big ABCD pattern last night, and then we rallied back above the 96 level again. So it goes down there and touches those levels and then promptly rallies quite a bit. That's a sign of a market that is trying to test for a bottom. Now, whether it's going to be a bottom or not, I don't know, but anything below 95, this thing would certainly be wrong, and you wouldn't want to have anything to do with it, in my opinion. So we'll watch that very, very closely. We'll see. Anyway, the question that we have is whether the copper is going to hold the $2.07 per pound level. We'll wait and see if it does that, and I don't know where copper is trading right now because I'm not able to pull up the prices as I'm doing the show, but we'll take a look at what happens with copper today. And I have absolutely no interest in copper. Coffee. I've had several people ask about the coffee, but frankly, I believe it's 219 level should be very, very powerful support in coffee, but that's just what the charts are saying. There's not much else there that will tell you that you're looking at something like this. We had Shane on Monday, and he talked about the Fed juice and how it had finally turned, and certainly the market's been down for 3 days. We've had some pretty good rallies in between these days, but certainly they've pulled out of the market supposedly because the market has had a negative bias, down here over the past 3 days anyway. We also had, remember, with Norm Winsky yesterday, we're going to talk a little bit more about Syzygy when we come back. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. We're going to take a look at crude oil right now. We had that 3 drive to, we've already talked about that. Anyway, after the bottom was made here in February, we made a lower low by 1 tick in February than we did in January. That's really a big thing when you see that, because you should always put your stops a little bit below those old lows, because that's just, people going down there looking for a bottom. They're not fishing for your stops, folks. Believe me, they're not looking for your order when you're in there. There's just too much going on for them to worry about that. The markets go to those levels because that's where they're supposed to go to, no other reason. That was one of the reasons why I went to the Chicago Mercantile Exchange to be a floor trader back in 1982, is to see how, if there was a lot of, what we call flashing of stops and stuff in the markets. And believe me, there is not. I was there for several years, and I saw some things that were probably not, copacetic, but most of the stuff was spot on, really very fair and accurate of what was really happening in the markets. And now with electronic trading, it's almost impossible to do anything like that. I mean, on a short-term basis in an illiquid market, you might be able to do something, but certainly not in anything that we look at. For instance, Treasury notes, that's the largest of all the commodities. I mean, nobody can manipulate that. Even the Fed can do it for a short period of time, but they can't do it for a long period of time. So these markets are very, very fair. So put your stops in. They're placed for your protection. And if you don't put your stop in, you're basically telling the market that you know what's going to happen and you don't need to use a stop. So that's not a good thing. So watch this unfold here in the crude, because we came down. We did get to the 38% retracement at the 35.89. We went about 40 ticks lower than that. And then we rallied up to the 38 level, which was the 50% retracement of the high that we made back at 4,200. Now we're backing off a little bit. So watch the pullback in crude oil, because if this is the bottom and the 382 is in, it's going to stop somewhere around that 36.80 level, 36.75, 36.80, and then try to attempt another high. This is how these ABC structures are formed, is that, markets go up and markets come down, and as it does, it gives you these different things. That's what's so nice about technical analysis, is you see these patterns everywhere. I mean, not just in crude oil, but you see it across the currency, stocks, no matter what you're looking at, they're everywhere. And that's the bottom line of what we're looking at. We've had a question here about the S&P, and there's really the key to the S&P, folks, lies in the spot where we were talked about. That's at 1244. Now we went down to 2044, and we rallied up 5 points, which is the harmonic number and the short-term harmonic number for the S&P. So if we get above 2053, then we put in a major bottom here, and it missed it by just a little bit. But this is still way too early. This is the opening. This is where they're jockeying for positions, and that's not the place to be. When you're doing this stuff. That's you want to wait until you see some of the what they call the whites of their eyes to see if there's going to be any fear coming in, and fear won't come into this market until we get below, say, 2042, when the 618 would be breaking, and then you would be looking at that next number that we talked about before that we've already hit, which is 2034. Now 2034 doesn't mean anything anymore, folks, except that it's a double bottom. You've got an ABCD structure set up because you had a high at 2072, a low at 2034, a high at 2061, and that sets up another low down there at around 2020. So that's all it's doing right now, is just backing and filling and backing and filling, and trying to confuse everybody, and it does a very good job most of the time. So keep an eye on it. That's basically what I'm looking at. I think that if we get below that 2043 level, we'll certainly go down to the 786, which comes in around the 2039, and we'll see if that's going to hold anything. But right now, it's still a little too early. There's not a lot going on. It's going up and down 3 or 4 points at a time, so that's not too much of what's happening. Okay. The gold is still trading around the 1244. It's broken out. Of course, the old high up there was around 1246, so there's going to be some stops up there, and that could be the thing that takes it up to 1256, because I think that's where gold is headed on this next leg. But it's still in a primary downtrend, even though it hasn't made the 1190 yet, and maybe it's not going to. That's the bottom line. The 1212 was a perfect ABCD pattern. I assumed that we were going to have a rally and then go back one more time to 1190. There's my assumption is wrong so far. I'm still waiting to see if that's going to be the case, but thus far that has not happened, and so I just have to wait and see, what's really going to happen with this, and then we'll go from that area. Someone's asked a question about natural gas, and I haven't had a chance to really look at natural gas this morning, but I will do that, and I'll cover it, on another program. Now, we do have a situation in the grain markets that is starting to look real interesting. I'm going to cover grains tomorrow at length, but just sort of keep an eye on. I'm going to see if I can get a price here. We've come down. We're about a half a point below the 786 in the wheat at 459, and it should hold that 460 level, which right now it's not, because it's already a quarter of a cent under it, but it still has a chance here. So keep an eye on the wheat. We'll cover the grains tomorrow, because I'm going to try to have Rich Anderson on the program to go over some of these things with the planning and intentions, and where demand is coming from, and how the U.S. dollar fits into all of this, because that's a big influential thing with the markets that we have in the grain markets, because we're very competitive with that. And as the dollar weakens, that makes our grains cheaper. It's easier for them to be bought and sold. Alrighty, we'll see. We're starting to sell off again in the euro now. We've come down well over 100 pips from our high last night, which was within 4 ticks of the exact 786 on the long-term daily chart. And looks like it's missed the boat on that one. The Treasury notes, we've got up to 131. We'd like to see them get to 131.0304, somewhere in that ballpark. That completes a really nice retracement in a bear market, so watch that one very, very closely. And here we got the stocks making new lows, and we're coming down to our 2044 as we speak, and then we'll see if this is going to hold. And if it doesn't, let's just quickly take a look at this, and we will get the 786 comes in at 2040, so you're looking at about a 4-point differential at that point. But I think the 2044 is going to hold. That's the way I would look at it. But I'm wrong a lot, but I'm occasionally right. So even a blind hog has to pick up his acorns in order to feed himself. So we'll see. Okay, now we have we got another commercial coming up here. Boy, the time flies when you're having fun here.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look now at the stock market before we move on to the next show. And we've looked at the New York Stock Exchange Index. You'll notice I posted that into the room today. You'll see that we've had these beautifully symmetrical lower highs, just as pretty as can be. That's what the real stock market is doing, folks. It stopped right at the 61% retracement. So, until we get the Dow up above 17,800 and above the S&P above 2080, it certainly looks like we're in a downside. So we'll have to wait and see if that is going to be the case. And we'll watch that. But the big thing, in my opinion, from watching the markets right now, it's the foreign currency that is offering the best opportunity. In the euro, the pound, the yen, the Swiss franc, all of these are looking very, very interesting. And that basically supports the fact that maybe we're going to see a rally here in the dollar, because it's setting right at the 786 retracement from a long-term charts here going back over the last 4 or 5 months. And remember, this thing has been going up for 4 or 5 years, so to have another ABCD correction is certainly warranted. But whether that's going to happen or not, we'll wait and see. But if we get to the dollar under 90, the whole world is going to be extremely bearish, and that's where you're going to have the ABCD, and that's where you're going to really look at it, because long term it will be completing the third ABCD pattern over the past 5 years. And they don't lead you to the promised land all the time, but they get you on the highway. The trouble is there's a lot of gravel roads sometimes off the side, and that's where you get off the beaten path. But these patterns will help you a lot more than they will hurt you, because they repeat over and over again, and they are predictable within limits. And that's what we're trying to look at. Watch these Treasury notes today at that 131.03 level, folks. That's going to be a really key level to watch, because that is the 61% retracement, and that would be a test of that important resistance. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.